Good day, ladies and gentlemen. So today is the 27th day of March 2024, and right now I've actually set up my trade. I've set up my my supply zone, waiting to take a trade. So the strategy I'm using here is the supply and demand strategy that I taught you some time ago. Okay, so one of the reasons why I love this strategy is that you won't be taken unawares when it comes to this strategy. Okay, and I like strategies like this. The market can't take you by surprise. Once you draw your zone, you just have to wait for the market to come back, so it will be difficult for you to actually miss your entry. Okay, if you drew your zone on a 15 minutes time frame, okay, all you just need to do is, you already know that one candle is going to be 15 minutes, so you can be checking at intervals of 15 minutes. And if it's 5 minutes time frame that you want to use, that means every 5 minutes you go and check to see where the market is currently. Okay, if the market is very close to your zone, then you have to actually watch the movements. Okay, from then probably you won't have to stay away from your screen anymore. You have to go everywhere with your screen so that you'll be able to see what is going on. All right, so you won't stay away from the movement of the market, you understand? But if it is still somehow far, you can go and do other things, but you just be checking your time, making sure that you come back every now and then to see where the market is. Okay, so I love that kind of strategy, whereby you have time to actually do other things and then you just come and check what is going on. And one other thing I like about this strategy is you can actually confirm it to a certain degree, in the sense that if market comes into your zone, instead of entering immediately, you try to see, maybe a candle or two move in your direction before you confidently take the trade. All right, that's if you're conservative. But if you're an aggressive trader, definitely you would just enter the trade instantly. Immediately the market comes into your zone, put your stop loss above the zone or below the zone, depending on if it's a supply or demand zone, and take your trade. Okay, so right now let me quickly break down why I verified this zone as a good zone. Okay, because you need to check your zone. Some zones will just lose you money, and I've given you the 3 criteria that will make your zone a very powerful zone. First one is your aggressive move has to break structure. Okay, and you can see that happened right here. We had markets create an high here, then created an higher high. Created an higher low. This is an higher low, not higher high. Higher low, then created an higher high, created an higher low right here, and created an higher high right here. So market was more or less moving in an uptrend fashion. Then all of a sudden we saw aggressive downward movements that broke structure. It broke this support right here. Okay, it broke this lower low, it broke the level of this higher low right here. Okay, what we're supposed to have is higher lows, continuation. But since it broke this higher low, then it qualifies as a what? BOS. Okay, break of structure. So there is a market structure shift. So criteria number 1 is met. The second criteria is there should be a fair value gap just before your zone. It makes your zone more powerful, because as we already know, fair value gaps tend to attract price. Okay, price will always want to fill the fair value gap, so that gives a credibility to your supply or demand zone. The fair value gap is not quite obvious on this my 15 minutes, because I drew the zone on 15 minutes time frame. And if you remember, I told you that if it's a supply zone you are drawing, you are going to use the boundary of the last bullish candle, while if you are drawing a demand zone, you use the boundary of the last bearish candle. So the last bullish candle is this blue candle right here. This blue candle right here, that's the last bullish candle. So the top of the wick and the bottom of the wick, I placed horizontal lines to depict my supply zone. Okay, so I'm waiting for price to come back there. So let me quickly, on the 5 minutes time frame, the fair value gap is obvious. So let me go to the 5 minutes time frame, so you can see the fair value gap right there. Okay, so right now I'm on the 5 minutes time frame. Let me zoom in so you see my fair value gap just before my zone. I think I need let me copy this, let me double it. Okay, Probably I should change the color so that it's not going to confuse us. So we have that done. Okay, so I'll copy this quickly. Let me delete this. Okay, so what we have now, let me show you where this thing is, the fair value gap between this and this. This is my fair value gap. The wick is quite small, so you might not be able to see it. Let me see if I can zoom in more. Okay, that's the highest level I can zoom into. So this is my fair value gap right here. For those that don't know what a fair value gap is, a fair value gap occurs, between three candles. When you have three candles following each other back to back, and the wick of the first candle does not intersect, okay, or overlap with the wick of the third candle. So there is a gap between the wicks. That gap is what we call fair value gap. And right here, the wick of this candle right here did not intersect with the wick of this third candle. Okay, the wick of the third candle is very, very small. You might not be able to see it well, okay, but I can see it from here. Okay, so the wick of the third candle did not intersect with the wick of the second candle. So I'll place an horizontal line, to depict the gap between the two wicks. Okay, so that's what we call FVG, fair value gap. And most times price is known to want to come up to fill a fair value gap. And if it fills the fair value gap, where do you think it is going to? It is definitely going to my supply zone. Then from there, you are going to have a massive drop, which is going to make money for us. Okay, so if you are getting any value, please subscribe to this channel. That's what encourages me to give you all these strategies and analysis for free. Okay, so let me delete my fair value gap. I don't need it. I already know my fair value gap is there, and I'm waiting for price to come back. So two criteria have been met. What's the third criteria? Third criteria is what is actually happening now, and I like it. And that third criteria is that when price is coming back to your zone, are you listening? When price is coming back to your zone, price shouldn't just come back straight aggressively like this with maybe a massive bullish candle. So because if it is coming with such momentum, I'm giving you the idea behind it. If it is coming with such momentum, there is a 90% chance or probability that it's going to disrespect your zone. It will go past it instead of getting to it and dropping. There's a chance it will go past it. Okay, it will go past it. You understand? But if it is coming in such a way that it is breaking or resting along the way, as you can see right here. Let me click on this. Okay. Moves up, comes down, moves up. You understand? If it comes in that manner, then there is a high chance that it's going to do what? It's going to drop from there. So I like the fact that market is dancing around as it's trying to come back to my zone. Okay, it's just gonna take a little bit of it take more time to get to the zone, but at least it falls under the criteria that I want it to fall under. So I'm happy. I can wait for as long as possible for it to come back to my zone from which I'm going to take a trade. I'm not going to keep recording this video and keep waiting. What I'll do is I'm going to end the video. When it gets to my zone, then I'll start the video again. Then you can see the way the trade will go. So I'll definitely give you a result for this trade. All right, if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.